Welcome back. Now joining me for a closer look at the day's trading session is Cobus Potgieter from Southern Cross Capital. Cobus, thanks so much for your time this weekend. I'm already in Saturday. Anyway, Cobus, it's been a week, right? Now, it's been a week dominated by central bank decisions, and we saw the Fed cutting rates yesterday, and this was the first time doing so this year, and hinting at even more rate cuts going into the fourth quarter. What have you made of this dovish shift, even though we haven't seen the complete impact of those tariffs filtering through to inflation?
The elephant in the room is, of course, the political pressure.
Yep.
And the one dissenting voice amongst the Fed. It's interesting that they don't quite take the same approach as our own MPC, where they have their discussion and then they put it to a vote and they go with the outcome. They seem to try to reach some kind of consensus. Whereas here, the Trump appointee, recent appointee, literally appointed on Monday, refused to go with the consensus. I suppose we're playing politics now, and insisted on voting for a so-called jumbo cut or a 50 basis point cut. Whereas the rest of the Fed struck a more dovish tone, and even though some of them are more hawkish, they opted to concede to this 25 basis point cut and were, other than this one dissenting voice, unanimous. Reiterating the independence of the Fed, but I think that's sort of the uncomfortable situation we're finding ourselves in. The Fed having to defend its independence and sort of insist that it is acting independently. But part of the reason why the market feels that this was such a well-telegraphed cut is because of that political pressure. Of course, supported by the jobs numbers, but at the same time, a little bit of a concern around, how much political interference will affect the Fed's behavior going forward.
Really unprecedented times. Who would have thought we would be discussing the Fed's independence, Cobus? So while the easing cycle picks up in the US, you talked about the SARB. We also saw the UK as well, the Bank of England, leaving rates unchanged this afternoon. Just zooming in on the SARB's move, it was expected, quite interesting to see, though, how slightly upbeat the central bank is about the local economy. And this off the back of one GDP print for Q2. They've now lifted those expectations from 0.9% to 1.2%. Cobus, what have you made of, the moves that were playing out at this afternoon's MPC meeting?
Okay, so our governor remains hawkish, and we know he is trying to establish the credibility of the new inflation target.
Yes.
So there is, to some extent, there's almost a period of pain to go through where, you guys would typically expect me to do another 25 basis point cut here, but no, we are reiterating the commitment to that lower target, so we hold. Two of the 6 members voted for 25 basis point cuts. I mean, that's quite dovish, frankly, given the hawkish tone of the governor himself. So it's an interesting dynamic we found ourselves in. It's good that they're turning positive, and to some extent you could defend not cutting, by juxtaposing that against your more positive economic outlook and saying we'll wait and see from this point. But ultimately, I think we're seeing that policy shift taking place, and that's going to take, of course, they're forecasting around 4% inflation for the full year, which is quite a way ahead of the run rate we are currently at, sitting just over 3%. So given that forecast, the decision is justified, but it'll be interesting to see into the next meeting how they adjust those forward rates if inflation remains as benign as it currently is. And frankly, given the rand's strength, somewhat supported by the fact that the Fed cut and we didn't, making the carry trade more attractive, the rand is strengthening against across all currencies largely. That will continue to put a lid on inflation because we import a lot of our inflation, of course. So, we'll see how this plays out over the next 3 months.
All right, let's move over to some company news. Interesting moves playing out in the tech sector, Cobus, where we've heard from Nvidia investing about $5 billion into Intel. The latest move is a spur, to shore up Intel's AI capabilities. I must say I wasn't too surprised when I heard about it, because it does also seem like a very political move as well, with Intel also having some political support from Trump.
Yes, yes. So of course, that unprecedented 10% investment made by the US government, that was announced about 2 weeks ago now, right? Maybe a little more. And subsequent to that, the support now from Nvidia. It looks like Intel will support Nvidia on the data center side, whereas Nvidia will support Intel on the PC side. Now, Intel used to be the dominant player in the space, but they sort of missed the shift to mobile, and at the same time, AMD overtook them in both the data center and personal computer, call it CPU computing space, never really competing against Nvidia in the GPU space. But this could be an opportunity, I suppose. They want to allay that pressure from the US government, and of course, Intel has been investing heavily into their foundry business. So both Nvidia and Intel shares up now. Of course, Intel significantly more. The potential loser from this transaction is TSMC, because this essentially gives Nvidia a new production partner on US soil, because of the foundries that Intel has been putting up over the last 5 years, and that is really something. Indigenous production of high-tech chips. That is something that the US government is pushing for hard, and this is potentially an avenue to achieving that.
All right, let's get your stock pick. Where are you seeing opportunity this evening?
I'm a sucker for a value trap, so my stock pick is Exor. Exor is a holding company listed in Amsterdam for what was traditionally Fiat Chrysler, has in the meantime been restructured into Stellantis, with Ferrari split out of that. It's essentially a holding company like Remgro, and some of the assets that it holds has been a little bit beaten down over the last 6 months, being traditional vehicles, internal combustion exposure, some Juventus, and a long tail of other assets. But the holding company itself has sold off significantly more than its underlying holdings, and is now trading at a discount in excess of 52%. So it's an incredibly cheap entry point into those assets. And what we like about having a cheap holding company in your portfolio is you're always exposed to that potential upside in some kind of a value unlock scenario, where perhaps one of these components gets unbundled or sold off. That could potentially unlock enormous value. And of course, getting in at half the price means you've got double the upside to a potential unlock like that. So we like the cheap entry points into those assets.
All right, let's leave it there, Cobus. Thanks so much for your time and taking us through trade this evening. That was Cobus Potgieter from Southern Cross Capital.